A golden fever has broken out across safe havens, while speculative blood rushes to the AI vein. The question isn't whether this rally continues. It's what breaks first when the Fed finally turns against you. Every sector moved with purpose today, and only one tells us where capital is fleeing next. The data is screaming that risk appetite has returned. SMH climbed 1.34% as Nvidia and Blackstone pour billions into AI infrastructure. The semiconductor engine isn't just recovering, it's reigniting. IRKK surged 4.68%, the strongest speculative move we've tracked in 3 quarters, confirming the Canary dashboard signal. Capital is hunting for asymmetric upside again. When tech leads with a 3% Nasdaq gain and small caps outperform at plus 1%, greed isn't just present, it's organized. Credit conditions are cooling but not collapsing. CRE dipped 0.51%, while RSP barely budged at plus 0.42%. The regional bank drag is fading, which the data interprets as Fed policy stress receding. XBI jumped 1.67 for net, showing biotech credit remains intact despite valuation compression. Our metrics confirm borrowing costs aren't strangling growth. They're just pruning the weak. Fear has flatlined into complacency. UVXY shed 0.37% as volatility compresses to VIX territory of 14.9. The indicators are signaling that hedging is being abandoned, which typically precedes a cardiac event when leverage spikes. GLD exploded plus 2.17% while UVXY fell, creating a fear inversion. Investors buy gold for geopolitical defense, but sell protection against market drops. This split behavior means fear isn't systemic. It's targeted. The real economy is overheating at the margins. XLE climbed 1.32% as consumer discretionary spending outpaces expectations. Industrial infrastructure, IYT plus 1.2, and megacap tech, MAGs plus 0.86 methadils, are moving in lockstep with AI capex cycles, not organic demand. The data shows a divergence. Consumers feel fine while corporate balance sheets tighten. This gap narrows when earnings accelerate, or widens when they don't. We're watching the bridge. Safety has fractured. GLD plus 2.7% and TLT plus 0.36% rose as investors hedge against geopolitical escalation, but XLP barely moved at plus 0.2%. The Canary dashboard shows defensive positioning is selective, not comprehensive. When gold rallies while staples flatline, the portfolio is treating safety like a surgical intervention. Precise, temporary, calculated. Bonds held steady at plus 0.24%. Confirming yields aren't forcing rotation, fear is. The hero today is your portfolio's agility. The villain is concentrated AI exposure without hedging. Tech led with 1.3%, while gold jumped 2.1%, creating a split signal. Growth is alive but fragile, and defense has become surgical rather than systemic. The data confirms we're in transition. Capital flows are rotating from broad safety into targeted hedges as geopolitical uncertainty spikes. Protect the portfolio by letting gains compound while volatility compresses. When VIX finally coughs up blood, that's when you deploy the counter trade. The verdict is clear. Greed has returned with surgical precision, but fear still holds one foot on the gas. Let your positions breathe through the compression. When UVXY and gold both spike in the same day, that's immunity building before the fever breaks. The Canary sings its warning now. Stay positioned for asymmetric upside, while geopolitical shadows lengthen.